to normal and inflationary pressures appear to be easing. Gold's price has consolidated near the 2000 level, remaining within last week's opening and closing range. Following signs of easing inflation, gold's ascent was put on hold last week, and it now appears that the shiny metal is moving in an upwards motion as the markets await further information. In this report, we aim to shed light on the catalyst driving the precious metals price and assess the future outlook. The mixed economic data stemming from the US has halted gold's ascent at its current levels, with the pressure slightly losing momentum. Last Wednesday, the US CPI print for March ticked down to 5% for the first time since the 10th of June 2021. The lower than predicted drop highlighted the Fed's fight against inflation may be yielding results and as a result weakened the greenback. Since the latest CPI print broadcasted indications of lower inflation that may ease the pressure on the Fed to continue their aggressive rate hiking path in order to avoid a recession. Following the inflation report on Wednesday, the market grappled with the latest Fed meeting minutes that indicated that Fed members anticipate a mild recession in the US, which boosted inflows towards the precious. Gold is anonymously considered to be a universal hedge against times of economic downturn, due to its safe haven status. Furthermore, the initial jobless claims figure released on Thursday came in higher than predicted, with the actual figure standing at 239K versus the predictor figure of 232K, supporting the view that the US employment market is loosening steam. This facilitated gold to further capitalize against a weaker greenback and allowed the metals price to move towards its all-time highs. On Friday, however, the mixed narrative from the US retail sales and the University of Michigan's expectation capped the precious metals ascent at around 2045 level. Even though the retail sales figure for March came below estimates, indicating a reduction of consumer spending in the economy. Hence, the potential for a slowdown may have weakened the greenback. However, the big picture was the industrial production for March increased, in addition to a greater than expected reading of the University of Michigan's indicators, signaling confidence in the US economy as a whole and may have mitigated fears of a recession. More importantly, the greater than expected earnings reports from major banks such as JP Morgan, Wells Fargo, and Citibank signal that the banking crisis fears may have been eradicated, thus providing some form of stability in the markets going into the week's bank's earnings releases. As a result, despite the pressures gaining support due to indicators of lessening inflationary pressures in the economy, the contradictory data and earnings releases on Friday provided support for the greenback, leading to outflows from the precious metal. Given the weakness from employment indicators, in addition to tightening consumer spending from the retail sales report, the Fed may have lost some leeway in the event that decided to further hike rates in order to further reduce inflationary pressures. However, statements made by Fed officials indicate otherwise, such as Fed Governor Waller, who stated during a speech on Friday, this growth would mean that so far tightened monetary policy and credit conditions are not doing much to restrain aggregate demand, implying that the Fed may need to raise interest rates further during their May meeting, thus translating into support for the greenback. Furthermore, according to Reuters, Minneapolis Fed President Kashkari stated last Wednesday that allowing inflation to stay would be even worse for the labor market. Hence, the relatively hawkish comments pushed traders to speculate that rate hikes are still on the Fed's agenda, as FFF at the time of this report implied an 88% probability of the Fed's increasing interest rates by 25 basis points in their May meeting. The hawkish comments did not result in major fluctuations in the price of gold, yet we note a slight decline in the price of the precious as the greenback strengthened. On the monetary note, traders may anticipate the remaining three speeches by FOMC members Broman, Waller, and Cook throughout the week, as they may provide further indication into the Fed's decision in May before the FOMC blackout period beginning this Sunday. Thank you for watching.